traders point to several factors in today's market sell-off. Let's find out what really happened. Joining me, John O'Donohue, head of equities at Cowen Company. John, good to have you with us. Thanks so much for coming in. So you got a crystal ball. Can you tell what really went on today, other than we know that there were a lot more sellers than there were buyers?
Yeah, the crystal ball's a little cloudy at the moment, Pimm, but I would say this. You know, we've had a rally that's gone on probably on lowest volume that I've seen in a long period of time, with a lot of disbelief. And if you looked at what happened to the put-call ratio, I'd say over the last few months, and especially as the VIX has declined, the amount of downside protection that was being put on really diminished over the last month or so. We're in the midst of earnings season now, and if you think about it, the market probably is getting priced close to perfection based on a PE ratio. So to have a 5% pullback here is not uncommon. In fact, to probably have a 10% pullback would be quite healthy for the market. So not terribly overly concerned about the market. Probably more concerned about what's going on in Washington. All
right, tell me, what are you concerned about in terms of what's going on in Washington? Is this a lot of rhetoric, or is some of this actually going to change the way Wall Street works from now on?
Well, it depends. It depends what comes out in the final wash. But if they do have some form of a reenactment of Glass-Steagall over time, and God knows how long that will take, you know, having seen what's gone on with healthcare, I would tend to think that some of the proprietary actions of the bigger investment banks will be curtailed. That will obviously put a crimp in growth or growth earnings, if you will. But I think, you know, the phrase "a new normal" is probably coming more into fashion as we look at things. So it's the individual. You know, are they getting out from underneath that sort of blanket of debt that they've been under for so long a period of time? Where do we go with housing? Are the banks actually going to lighten up a little bit and help people refinance? So I think there's a lot of that goes on. But I think, you know, we've seen so much rhetoric out of Washington in 3 or 4 days that it's probably enough for a month right now. So it's been quite awful.
You brought up the whole idea of housing briefly, and even that seemed to be at greater length than what we've heard all week, because there has been no mention really of what's going on with Freddie Mac, Fannie Mae, the lifting of the ceilings there. And while the fingers are getting pointed at a lot of the banks and brokerage firms, is there anything that's going on in the housing market that you can see that that leads you to believe that the government's going to get out of that business?
Not in a short period of time. I think Warren Buffett said best, if you buy, I don't know how many bulldozers it was, and take down X number of houses, perhaps we'll get rid of the housing glut. But I think there's an awful lot of finger-pointing that's going on right now. And as you say, Freddie and Fannie are just up to their eyeballs in it. And from the standpoint of how it takes time to work out of, I think it's more a period of years than it is months. So this will be a longer process. But obviously, with what happened in Massachusetts, you've got a White House that's fairly angry right now, and you can see it in the rhetoric that's coming from President Obama.
I'm sure you're getting calls from clients. How are you counseling them if they're looking at equities right now as the head of equities at Cowen? I mean, what do you counsel these people after these 3 days?
Well, I mean, a lot of the risk factors that one looks at, especially as regards market cap, is very important in times like this. So having a strategic view as to whether it's large cap with liquidity or you go further at the risk curve and take on a small cap position is something you should be very cognizant of. I think a lot of times in periods like this, as the risk curve has sort of moved out a little bit, the small cap has outperformed. But I think what you'll see now is probably more a move to large cap equities if people have to be in equities, with sort of more of a, I'd say, a multinational type view. So the Procter & Gamble's and the Pepsis of the world will come back.
Indeed, Procter & Gamble, one of the few stocks, was actually up today.
Sure.
All right, I want to thank you very much, John O'Donohue, coming in, the head of equities at Cowen Company, and giving us some insight on today's market sell-off and also the rhetoric that's been going on between Washington and Wall Street. Thank you very much.